Hi everyone, and welcome to this week's CLiK Trading Education Market Roundup for the week ending the 12th of December. This week was a classic case of markets moving, not because they wanted to, but because narratives forced them to. Tech took a breather, silver stole the spotlight, and geopolitics reminded everyone it still has a seat at the table. Let's break down what actually happened, why it mattered, and what traders should be watching next week. If this week felt messy, conflicted, or slightly indecisive, that's because it was. Markets weren't directionless, they were narrative driven. Politics, central bank messaging, and sector rotation all pulled price in different directions. And importantly, price reacted to the story first, not the data. This is a really important lesson for traders. Markets don't move in isolation, they move at the intersection of sentiment, positioning, and expectation. In other words, fundamentals were in the room, but sentiment had the microphone. Looking at equity indices, the story wasn't panic, it was rotation. The S&P slipped modestly, the Nasdaq underperformed, while the Dow and Russell actually held up well. That divergence tells us everything we need to know. Capital didn't leave the market, it moved within it. When uncertainty rises, money tends to rotate away from growth and towards perceived stability, value, and domestic exposure. For traders, this is a reminder. Broad headlines don't trade accounts, relative strength does. Big tech spent the week very much in the sector weight room. Nvidia, Meta, Google all saw profit taking after strong year-to-date performance. This wasn't fear, it was reassessment. Regulatory chatter around AI governance, data privacy, and China's tightening of tech export controls added just enough uncertainty to cool enthusiasm. Tesla and Apple were notable exceptions, reminding us that even within sectors, leadership isn't uniform. The key trading lesson here: sector leadership shifts before the data confirms it. That's why we trade structure, not predictions. Precious metals had a strong week, with silver clearly outperforming gold. Gold did what gold does best: steady, defensive, and supported by geopolitical uncertainty. Silver, however, benefited from both safe haven demand and its industrial link, which added momentum. This is a great example of why metals don't trend neatly. They oscillate between fear, positioning, and real rates. For disciplined traders, this is where structure shines, and where emotional traders tend to overstay their welcome. Oil told a very honest story this week. Despite geopolitical tension, crude sold off, largely because demand concerns in Europe and Asia outweighed headline risk. That's an important reminder. Not every geopolitical headline leads to sustained trends. In FX, the theme was technical, measured, and selective. EUR and GBP moved modestly, the Swiss franc strengthened as a safety play, and the dollar reacted more to data than drama. FX remains a market that rewards patience, levels, and repetition, not excitement. Crypto markets stayed choppy rather than directional. Bitcoin and Ethereum edged higher while XRP lagged. Nothing explosive, just digestion. Meanwhile, the VIX drifted lower, suggesting surface calm in equities. But here's the warning: compressed volatility often precedes expansion, especially heading into data-heavy weeks. And as always, crypto teaches psychology faster than most traders would like, usually right after confidence shows up uninvited. Social and political developments played a big role this week. Continued uncertainty in the Middle East supported safe haven flows, but capped energy upside due to demand concerns. In the UK, fiscal and political debate injected noise into GBP and UK equities, but without follow-through. Across Europe, mixed economic data kept euro pairs firmly in range trading territory. The key takeaway: narratives shape sentiment before fundamentals change. Traders must watch both, but trade neither blindly. Next week is where things get interesting. US CPI and retail sales will matter, particularly core inflation. A hotter print could trigger risk-off behavior and dollar strength. ECB and Bank of England commentary will guide FX expectations around higher for longer, and global PMI data will give insight into demand trends heading into year-end. Watch tech breadth, crude inventories, and gold and silver volume closely. These often move before price accelerates. Every December teaches the same two lessons: narratives intensify and trends pause, and markets reward process, not prediction. If next week feels noisy, that's normal. The opportunity lies in preparation, discipline, and execution, not trying to guess headlines. Remember, a loss is never just a number, it's feedback. The market doesn't owe us profits, but it always offers lessons to those willing to listen. Have a brilliant weekend, and as always, trade well, manage risk, and respect the process. From all of us at CLiK Trading Education, experienced hands, honest markets, practical insight,